this. It just shows where price is going. But as you can see, you can see that spot right there, 176.47. Well, we closed there one day. But when you put the candle on, now it looks totally different. So why is that? Well, it's giving you 4 pieces of key information. The open, the high, the low, and the close. These are all important pieces of information. So, for example, if you simply only paid attention to the close, keep an eye on this right here, the 12th of September. So, the 12th of September closed at 183.23. However, when we put the candlestick chart up, it's bigger. Now, why is that? Well, that goes back to that open, high, low, close. So a candlestick is built with a body. That's what this big part is. And wicks that come out from both sides. So, for example, you might have a candlestick that looks like this. They are a variation on the old standard bar charts that might look something more like this. So what you're doing as you read from left to right is you're finding the opening price and the close price. So this line here is the total range for the day. So that's what both of these are telling you. So in other words, you opened at this price, you closed at this price. So price rose during, in this case, a day. It could be an hour, 5 minutes. It doesn't really matter. It's whatever time frame you choose. So when you look at this candlestick chart, you can see that it comes in a couple different colors. It can be any color you want. You can change that if you want. But let's focus on the red ones for now. So what the red one tells us, right off the bat, without knowing anything about the price or the type of day, red tells us, or black, in a white and black chart, that price fell during this candlestick, again, which is a day. So you can already discern right away that the range, that's what the wicks are. This is your high, and that's your low. And this is simply the same thing as this. The real body is where we traded most of the day at. So think of it the same way you see these ticks going out on each side. And since it's lower, you know that the open had to be up here and the close had to be down here. Otherwise, it wouldn't be red. Just like if you had a candlestick like this, you know that the close was higher than the open. So in this case, this would be green or white in a black and white chart. And that's basically what the candlestick would look like. You also know that that's your low and that's your high. So price rose over the course of that day. So let's take a look at a couple of these candlesticks. This candlestick here tells you the price fell ever so slightly for the day from the open to the close. But it had a long wick underneath, which means, if you were to draw it as a line, just this one day, it would open like this, it would drop, and it would close like that. And that's important information. That's information you don't get from a line chart. And the reason that's important is because obviously there's people underneath there pushing price higher. That's why it didn't close all the way down here. And then you turned around and you saw this candlestick here. And you can see that we opened and closed higher. And in fact, as I zoom in like this, you can see that there was no wick. So we opened and just went straight up in the air. We did rally a little bit, go a little higher from here, and then close right there. So this candlestick looks like that on a line chart, or on a bar chart, it looks something like that. There's your entire range. There's the open. There's the close. So it doesn't matter the market that you look at. And I mentioned that they can be white and black. I mean, you can set it to any color scheme you want, but the two most common are red and green and white and black. In this case, black would be the same as red. It would be negative. White would be the same thing as positive. So on this candlestick here, as an example, let's go ahead and draw this one out. You had a little bit of a wick, but you closed higher, and you pulled back just a little bit before you closed. So that's basically how the day went, bullish day. Just as this one here had just a tiny wick above, so it did try to go higher. Then it fell pretty significantly and closed like that. Real body matters. The longer the real body, the more conviction there is behind the move. And that's because they were willing to close higher, significantly higher than, say, they would on a candlestick like this. It was pretty quiet. The range is much shorter. Doesn't mean as much. But when you see something like this, a lot of times you'll see follow through. Look at this big, huge candle here in Ethereum against Tether. Rallied significantly, and we continue to go higher. And in fact, this looks very strong because we're seeing these big, long candlesticks. The size of the real body matters simply because in a candlestick like this, or better yet, even this one, we dipped a little bit, shot straight up, and closed almost at the absolute highs of the day. That means people were comfortable not only buying, but holding. Of course, the same thing can be said in a very bearish market. If you see a big sell-off, look at this big red candle here. Tried to rally, broke down, closed towards the bottom. It's no surprise that we continue to get a little bit lower from there. Now, there are a world of candlestick patterns out there that you can pay attention to, and we will go through some of the most important ones in this course from here on. There are literally hundreds of candlesticks and candlesticks patterns, groupings of multiple candlesticks, which is, up to each individual trader. Most traders will find a handful that they really like, and then they'll match it with maybe support or resistance. So, for example, you might like outsized candles on a breakout. Well, that's exactly what you got here. This was obvious resistance. We kept seeing sellers step in right around 250. We broke out. We closed near the top of the day, and that kicked off a pretty big move. That kind of thing is what traders will look for. Some like specific candles like this one. This one shows that the sellers came in, but they turned right back around and bought it back up. It's actually a candlestick that we will talk a little bit more about in a couple of videos. These big red candlesticks, people like those. Just like this big green candlestick that closed at almost the exact top. People like candlesticks that break out of Bollinger Bands. It's pretty much unlimited. This is where back testing comes into play as well. Part of it is psychology. Certain candlesticks